Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, where do investors stand? It is Friday, September the 26th, 2025. Let's get started now. Up at the top of the list, we've been seeing these a lot here, but gold and silver. Silver actually outpacing gold this week. Down on the bottom here, Bitcoin selling off the short term. Really nothing changed. And again, a little bit of risk off for sure. You can see the small caps, mid caps down at the bottom. Just a reminder, pause your video player at any time to dig in for more details. This is the Russell 1000. I mean, like all indices in the top panel, they are rising. But yesterday, we are suddenly at more lows than highs. Now, again, it's one day. You can see there was one day in the summer, and really other than that, we've had more highs than lows. That means more stocks are hitting the highest level they've been at in a year versus the number of stocks that are hitting lows. So again, there's been some creep in the number of lows here, very mild at this point. We'll see whether it develops into something. You can see the advanced decline lines similarly as well. On the mid caps and small caps line, you can see some deterioration. Again, I think we can kind of start to see things in the top if we want, but the bottom line is the market has been in a very strong uptrend, to say the least. Market breadth is oversold using this measure here. In the bottom panel, we've got the S&P 1500, so that's 1,500 stocks, and the percentage of them that are greater than the 10-day moving average. So we're down at 28%. We'll call that oversold, which means underneath the indexes, we've had some, selling this week a little bit in the short term. Let's look at silver and gold. Year-to-date returns here on the left side. Wow, silver is up over 50%. Gold is up 40%. Look on the right. This is silver divided by gold, and you can see that over the course of the last 20 years, it is quite clearly silver has been very weak, right? So when this chart is going from the upper left to the lower right, that is a downtrend. You can see this downtrend has been quite pronounced in the course of the last 4 years. So even though silver has started to outperform recently, it is not outperforming in the bigger picture. Will it change? Who knows? We don't know. I don't know. Maybe you know. Let's take a look at this. I thought this was entertaining to some degree. Here's all the big countries here with the FX reserves sorted, and there's Canada. And this is how many tons of gold each of these countries have as part of their reserves. Oops, 0. Yes, that is true. Canada is one of the few countries that has no gold. And yes, I know we have a few gold producers, but again, gold is obviously rising. It has been rising, which has been protecting purchasing power. And that applies to not only people like you and I, but also to governments. And unfortunately, the Canadian government is not benefiting in any way. Let's take a look at Tesla here. I want to look at the left chart monthly, middle is weekly, right chart is daily. I posted my tweet over top here. I was in a conference last week and had a conversation, just again, narratives, headlines, standard type conversation that I find myself within. I'm always interested, right? When we as people, as humans that are emotional, we get involved, right? We see headlines and we start to sort of extrapolate them into what is and what should be in markets, and I think that is dangerous. And again, Tesla's been one of the strongest stocks in the market the last month. It's been very good here. On the right side, you can see here, this is the daily chart. Our all-in-sync pool and our clients sold some call options against our position. Again, that's nothing more than short-term call options a week and a half out. But the bottom line is this has been a strong stock. And again, you can see on the left side, the monthly chart here, we're on the cusp of going to new highs. And this looks very constructive. In fact, somewhat of a cup with handle pattern here on the monthly chart. Let's look at some of the Chinese stocks, which have been very strong. This is a little bit of smattering here of a few stocks, Kingsoft and Alibaba, which is much bigger than the other two, and NIO, another electric car maker. You can see on these daily charts, they are indeed in uptrends. Now, again, Chinese stocks typically are more volatile, absolutely. We always want to understand volatility. We always want to understand how much we can reasonably expect our stocks to move, because they all are different. And so again, let's move on to energy. Energy stocks have been very weak on the whole. The sector has been weak. The relative strength has been weak. There is the odd standout, Imperial Oil on the right side, a dual listed Canadian energy stock. You can see broke out here earlier this year and has just been going straight upwards since. I did notice Halliburton this week broke out of a base, not a huge base, but I'll call it six months or so. Pretty nice looking base on volume. And so again, that's kind of what we'd call an Invertigo style buy point. When again, the base breaks out, not an uptrend, or perhaps at least a new uptrend on the right side of the chart. But the bottom line is, I think we want to keep an eye on energy stocks. They have been so weak. Crude oil has also been very weak. So again, it's not to be surprised necessarily, but at the same time, we want to understand the market is capable of rotating. Rotation, here we go. These are several stocks, 4 of them actually. They're actually all Canadian stocks. 3 of them are interlisted, and these are all in-sync universe stocks, which means their long-term history of outperformance against the S&P 500, 1, 2, 3, 4, 5, 10-year 3-year timeframes, but you can see on the right side, they've all peaked and they've been going lower. Now this happens. Stocks peak, stocks go up, and they can peak and bottom on different timeframes. These are weekly charts over the course of the last year and a half, but again, I never know whether a short-term peak is going to lead to an intermediate-term peak, going to lead to a long-term peak. So again, our clients know that we take action, but the bottom line is I wanted to show those to you because they sit as backdrop against a strong Canadian market. Again, I also find this entertaining. Certainly this market has been, there's certainly stocks that are weak. These are stocks that we're all familiar with. Target, some people say it's their favorite store. Campbell Soup in the top right is we'll call it the soup trade. There's the cereal trade in the bottom right, and Church & Dwight, certainly Arm & Hammer and all kinds of baking soda and things like that. Again, those look like downtrends to me, and those are very weak stocks. And so again, the market has been rewarding offense stocks. It's been awarding those that take growthy kind of stances in their portfolio, not the value stance, not the defensive consumer staples like we're looking at. Let's finish off here with Sector Watch. There's those gold stocks up on the top of the list. They've been up there quite consistently. And then at the bottom, you can see some sell-off here just in the short term. But again, the trends are sitting there from a short, intermediate, long-term standpoint. I will be again off next week. I'm going to Dubai, and again, I thought, not sure if any of you saw my tweet regards to ANA Airlines, which is the Japanese airline, and Air Canada, but my goodness, can be a big difference in service. I'm very much looking forward to flying Emirates to Dubai next week, so there will be no webinar. Please follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financial in Sync in Waterloo, Canada.